Yeah, when you're looking at the VIX here, we do see it near year lows here. And certainly when you look at the VIX, it does actually provide a lot of insight about the markets because basically volatility that's triggered into stocks bleeds over and it all the way starts from the bond market and that triggers down to stocks. And as soon as you see stock volatility, that shows risk. And so what we like to do is take a look at the VIX and see where it's gone from, where it's at now to determine if things are too complacent, right? And what typically happens when you're looking at the VIX is you see these little cup formations. When things get nasty or volatile, it usually doesn't happen off of a big sell-off in the VIX and all of a sudden right back up. What we get is this resting heartbeat period here instead of just that big spike. And so you get this cup formation where the market sits around at new all-time highs or 52-week highs, and you start to see higher lows in the VIX. And that's typically an indication of when you should be selling stocks and taking some profits because the market is getting complacent. And we saw that over the last 5 years. Now, when you look at the next, basically, last year or so, January 2015, all of 2015, we got this cup formation already, right? So this was a period where we had a spike at the end of December, beginning of January. Volatility came back off in the springtime, and you saw this long resting heartbeat period. All of a sudden, we started making new highs in the market, and the VIX started climbing a little bit higher. And right in here, where the VIX is making new higher lows, that was an indication of when you needed to get out. We had the Greece issues, we had China, certain issues like that caused the market to spike, involved the spike. Now we're in a period here where VIX has basically trailed off and made basically a downtrending formation here, which to me is actually a bullish indication for stocks. We're not in that resting heartbeat quite yet. So to me, I'm not ready to sell this market just yet. And when I take a look at it, the one thing that I would look at is how's volatility behaving in all other kinds of areas. And yes, certainly Treasury volatility trading higher, gold volatility higher than stocks. You would think that volatility in the stock market would start to bleed in as everything moves together, fear and greed moving together, that some of that would move back up. But certainly I'm looking for the VIX for that sort of resting heartbeat to occur, maybe around 10 or 11 in the VIX on the downside. That's when I would start to look to sell stocks. And then, of course, we get a spike back up in VIX. I like seeing 50, 75% moves up in the VIX as a time when you would go back in and buy the market. But right now we're kind of an in-between stage, and I think the market continues to press higher until we reach that resting heartbeat in the VIX.
Mike, on the same page as Brian? Hold the markets?
Yeah, I think we do hold the markets. I mean, I said last week, I think you should probably, if you want to, as a substitute for stocks, think about buying calls in the SPY, for example. Take advantage of that low premium. The only thing that sort of spells any kind of trouble to me is when I start seeing things like credit spreads widening out a little bit. Things in the credit market, oftentimes they see the ice cracking beneath your feet, even though it's summer, a little bit sooner sometimes than the equity markets do. And there, we actually haven't seen credit spreads coming in that much. So I think there's a little bit of anxiety there. That's what I would be keeping an eye on.